Good morning, everyone. Welcome to Admiral Markets. This is the strategy webinar of the 14th of January. Quick introduction here of this PowerPoint and this strategy webinar. First of all, the fact that the webinar itself is intended for a global audience, please take into account that the session may not be suitable for everyone. To find out if it is and other details, please visit www.admiralmarketsglobal.com, then choose your country of residence and contact an appropriate entity. Also, please be aware of the fact that trading for exchange and other financial markets is considered high risk and it may not be suitable for everyone or all traders and investors. Therefore, please seek the advice of an independent financial advisor for more information on that. This webinar is not advice and is for educational and informational purposes only. And by continuing watching this webinar, you agree with the disclaimer and you also agree with the risks involved and that they're yours to take. Alrighty, today we're going to take a look at some potential setups that I find interesting using a various set of strategies based on Fibonacci, trend lines, moving averages, candlesticks, pivot points. So these are, I would say, the main 5 things that we will be looking at. If you have any preference, we can start with that. Let me know in the chat. And if you're new, by any chance new in this webinar, joining maybe for the first or second time, let me know in the chat as well. So let's take a look at the market and see what's going on at this very point in time. First of all, though, a quick peek at what we have here. We have some lighter and medium news until we get to the USD core retail sales and retail sales. Well, let's see what's going on. We have CPI. That's the consumer number for Italy, and it's expected to be 0. All right, so let's see. I mean, according to the official statistics, prices are a bit deflationary in Europe, but I've read one commentary today which is saying, yeah, I don't see the deflation. Prices around we are going up, and he wrote a whole list of items that have actually been increased with the new year. You know, when the new year comes, end of December and beginning of January, of course, just a few weeks ago. It's a typical moment for potential salary increases or not, but also price increases. And it's interesting, of course, to see how that person compared all the new prices. I looked at simple things like bread and the pizza and the burger and chips and the doctor visit and the coffee, and all those prices went up, in fact, sometimes not with a little margin. So sometimes interesting the level on the ground, let's say, and the official statistics, how discrepancy sometimes there could be. I didn't do this myself. It's interesting, actually, to keep track. I didn't do it around my neighborhood. Does anyone here live in the Europe and keep track of it? By any chance, do you see deflationary prices in your region? I'm asking people in Europe because the EU is showing deflationary statistics, so I was just curious. I'm asking because I just read the commentary today and I found it quite an interesting point. Anyhow, I'll wait for any comments if there are any and move on to the euro dollar. Euro dollar yesterday, we had a break. I was thinking we'd get the break to the upside, remember, but I did say we have to keep an eye on both lines, and a break of any of those 2 lines would be a breakout. So we got the breakout to the downside. I did want to pull back, hook back, and that we never got. It kind of missed. Here we had a pullback. Let me go to the 50-minute chart. Here you got a very, very small pullback. Now, I don't think many of you, I didn't catch that. I was looking for a pullback up to the trend line, and it missed it by full 15 pips here. So if anyone did take the immediate break, then you had about a 67 pip fall potential. Not necessarily, of course, would any trader necessarily catch the exact 67 unless you're very lucky. but that was the potential there to the downside yesterday. Now, price didn't move all too far. As you can see, it posted 1, 2, 3, about 7 hourly bearish candles in a row before getting a bounce, pullback, and then, of course, we got the Asian session, and not surprisingly, nothing happened, and a triangle was built throughout that session. So what happened? We stopped again at the same bottom here, at the same 117.50. So although we broke the triangle to the downside, we didn't break the bigger bottom, so it could be a double bottom. When looking at the weekly chart, the monthly is a bit better. 1 second. There is a support level at 116.50, right? So maybe that's why we're getting a bit of a struggle. I don't know. I don't think so. I don't think that's just coincidence. Anyhow, 117.15 is the place where we stopped, and we stopped again the second time. So it does look like a potential double bottom, and we could maybe get a retracement up to the weekly pivot point. Is that worth trading? Although I think there's a decent chance we'll get there. It doesn't really seem to be that interesting at the moment. There's about this much space left. There's about this risk, and we're in a downtrend and had a break yesterday. I don't know. It doesn't seem that attractive to me. Perhaps if we get a bit of a pullback here, and we can use the moving averages as a bouncing spot, like this. But it's definitely has its risks. So I'm not too fond of it myself. Probably better from a pivot point perspective is to look for some reaction at the weekly pivot point at 118.60 again. That's probably the most interesting at this point, using the weekly pivot point for a bouncing spot right at this resistance for a potential short, and basically a completion of a correction like this, like that, right? A typical sideways consolidation zone. Now if price stops at the weekly pivot point, moves down, and then starts to go up again, then price could go higher. It could go up to all the way here, as we know. By placing a fib yesterday, I already told you yesterday, by placing a fib from here to here, we can see that price has the potential to go up to what? The 38.2 fib, right? 119.32. So that would be the target if it breaks above 118.60. There's about 70 pips here, where I have the green dot. For the moment, though, a renewed short at this level makes sense. There are two ways of doing it: a pending order, obviously, or market order. Market order would mean waiting for price to get there, and I would wait for a candlestick wick or pattern at that level. Pending order would be a direct entry order right there at the weekly pivot point without any signs of confirmation. The advantages, there are disadvantages and advantages of both styles. In this case, I think pending order is possible with maybe I don't know, let's see, it's a tight stop loss of about 25 pips could be enough even. Aiming for 50 pips, for instance, 2-to-1 trade. I only do pending orders basically if I have a lot of if I assign a very good probability of a trade. Otherwise, I'd rather take market orders. And this one is decent. It's decent enough to consider it at least. I'm still doubting if it's really worth it. It's roughly speaking, let me say it this way. I mean, pending orders I really like to do at spots that are 70% probability. I assign 70% probability. Sometimes even 80, somewhere around there. I don't know about this one. I think it's a bit less than that. But if you aiming for a small target would increase the probability, though. We can look at various specific techniques. Now we used all of these tools together in one approach, let's say. If you would like use each style separately, of course we could do that too, but for instance, with regard to moving averages, right, specifically for the moving average strategy, what I'll be looking for is, we're in the moving averages again. Price will probably get through it a bit higher. Moving averages will probably turn slightly green here, slightly bullish like we had here. Here and here. So what I'm waiting for is that moment, and then I would wait for the candle, 4-hour candle, to close below the 21 band. So what I want to see is the change of the color here, and then the 4-hour candle to close below it. In that case, I know we've retraced, bounced, and are breaking below the band again. That's how a specific strategy, how you can use the 21 band in a trending mode with emphasis on trend, not range. And in fact, if there is a range, of course, these moving averages have less value, or maybe almost no value. Okay, that's a typical example of strategy using moving averages. You can use it as support of resistance and wait for breakout below or above it. It's not as mechanical as it sounds. I would still use discretion in that when looking for setup, preferably not taking a trade too close to some key levels or something like that, because then of course price could struggle. I think in the example of euro dollar, 116.50 is still 116.60 is still a decent amount away. So there should be enough space. These moving averages, yes, no problem. These are 3 21 EMAs. All three are 21 EMA. And that's why they're parallel of each other, because one is the close. You don't see that here because it's a special indicator. But one is the close, one is the high, and one is the low. 21 EMA close, 21 EMA high, 21 EMA low. And that's why you see that they're parallel to each other, because if you would use different numbers, then they would cross each other at one point. You can use the normal indicator if you wanted to. It would be the same effect. If you want the coloring, like when it's bearish or bullish, then that is not on the standard MT4 platform. But I can send it to you. I will send my email address to you through chat. Just send me an email, which indicator you would like to get, and I will send it to you. Yep, no problem. So moving on to the pound dollar, I was with the pound dollar, I was in a short, and with the euro dollar, I'm in a long. The euro dollar is still alive, despite the fact that it did go against me yesterday. I was in the trade here, by the way, so now about break even. The pound dollar, I was in a short. It was a bit small mistake from my side. I aimed for 150.74, and price stopped at 75. I had a 90 pip target, and I took a 45 pip risk for a 2-to-1 trade. But I made a mistake because I shouldn't have aimed for 74. I should have aimed for 76. And why is that? Because the 3/4 levels are also known to be support and resistance. 75.25 are also levels to think about when aiming for TP. I should have put it just above that 3/4. Just like halves and wholes like 0, 0, and 50 are important. So that was not the, I just didn't realize. The reason why I didn't realize it was because I was aiming for the ratio. I was aiming for a specific 2-to-1 ratio, which distracted me from the fact that actually the trade was actually at 74. So I was blinded by the R to R ratio in just looking at the obvious, that I should have gone 2 pips so higher and should have gone for 88 instead of 90, and okay, then the ratio is 1.95 or whatever instead of 2 to 1, which is, I think, not, yeah, that's a pity, of course, right? I'm still in the short, but I think by now, let me check, maybe not anymore. No, I'm out of it, in fact. That's a pity. Now it's a 45 pip loss. So it's a bit of a pity. Instead of catching 88, I have minus 45. So the difference is about 133 pips, which is substantial. And a bit unlucky, of course, to be so close here, literally 1 pip away from the target, but then see it turn around. But it happens. So. Luckily, I had a great pound yen short that made 320 pips, so I'm not all too upset about it. And also the euro yen short, which made 160, so that compensated a lot. We'll take a look at those pairs in a second. But ultimately, I was expecting actually price to make a bounce here, or not. Well, let me say this way. I should rephrase that. I was not maybe expecting it, but I was considering that a serious potential. So that's why I wanted to get out here as well. If you take a look at the hourly, I wanted to have a safe target, and I aimed for the 78.6 fib. Actually, price just missed it, I guess, a tad. That can happen sometimes. That's what I was aiming for. So indeed, we did get a bounce, although not exactly at the 70.86 fib. We did get a bounce there. So it seems like indeed the correction is continuing, and the dip here was a good trade, and then we're getting a kind of a bigger correction like this. Now the fact that the pound dollar is breaking like this looks like we're getting a reversal correction. And how far can that correction go? Well, we could put a fib, as I said, on this very up move, like this. And the places to look for a continuation of the downtrend are at these fibs. Primarily the minus 618. I will be very interested in a short at the 152.90, but preferably, actually, in my opinion, when there is a candlestick wick to be seen. When there's a candlestick pattern to be seen either in the 4 or 1 hour chart. And because there's sometimes these prices accelerate, and we could go all the way to the minus 1,000, 153.50. You don't want to get caught in a momentum like that. Until that point, there could be a counter trend long. I like the short in this zone a lot more than the long here, to be honest, because of the bigger downtrend. But it is possible. We did reach the H4. If we add Camarilla and pivot points, we can see that if the price retraces this big hourly candle back to the weekly and trend line, it could be a bouncing spot for that move up. You see that? It's definitely a decent probability. And one of the things we can also use is, this is a pretty good breakout candle. I mean, it's not the best of breakout candles. It's still less than half of the candle is still below the trend line, but okay, it could be a decent breakout. One of the rules, of course, that you can use is something like an easy rule of thumb is like let it center before you enter, and you basically look for the retracement of a candle. So that would be about halfway, about here. Stop loss in that case. Oh, we already hit the, no, okay. Yeah. Probably below this bottom here, 151.35 perhaps. Maybe even a bit lower actually, 151.30, 27. Yeah, about a 50 pip stop loss probably. Let's see if there's anything else though that is with the trend. How about a break pullback continuation on L3? Yes, L3 is indeed very close to the halfway mark of this hourly candle, I guess. Let me take a look. Yeah, the H3 indeed is, yeah, sorry, I knew that you meant H3. Indeed. The H3 is indeed about the same spot as this 50 fib. So an entry at 84, it's only a few pips away from now. Could be a potential, but let's see if there's anything else going on that makes sense. Dollar yen has arrived at the 78.6 fib that I was talking about. Finally, it started to accelerate slowly but surely to the downside. So that was good that we realized the potential for a correction, I think. And we got the slow but surely the downside. So I think that it was good to be aware of that, because any longs that were in here, we knew that there was a potential for more downside correction. So shorts, I think, were more preferable. One of the reasons why I liked, because of the dollar, I also liked the pound yen as well. And we see that we got to the 78.6 fib, which I think was a potential pound 6 spot, right? Now we never know. Stop loss could be below here. Could even be below the 78.6, although that's very tight. And a conservative target, of course, because we are in a downtrend, could be just aiming for a bounce. A more aggressive target would be aiming all the way up at 127 in a way, because that's how far the bounce could be, perhaps. If indeed this turns out to be a triangle, and then we break after the triangle to the upside. Which one do you prefer depends on really how much you feel comfortable with holding a trade. Ask yourself, would you feel comfortable for holding a trade for 6 weeks, 4 weeks? Because that's what 127 would mean probably. If not, then aim for something lower. If you're okay with holding it for a day, then I would say aim for a rally bounce, probably not more than 118.25. Of course, the risk with any sort of trade is the fact that this trade is now, although the bigger daily, weekly trends are up, this trade on a lower time frame is now counter trend, because the medium time frames like the hourly and 4 hour are down, and the 30. So you got long term up, medium down. So you might be trading with the daily and the weekly, but you're trading against the hourly 4 hours. That's always has a bit of risk, because we don't know how far the hourly and 4 hour will be pushing to the downside. We do know that on the 30-minute chart, though, we've reached the L5 at least. Let's take a look on the hourly. We've reached the daily S2. So besides the weekly and the daily trend, we do also have some intraday levels that are quite not, well, let's say it this way, they have been already, price has already reached the pretty decent levels within the day. There could be some downside left still, but it has moved down quite substantially already, and it's reaching what we would typically already consider quite far levels, like the daily S2. So this is a typical fib trade, right? This is an example of a fib trade where we're using this 78.6 fib. And it's difficult to even imagine price indeed turning at the 78.6 fib, but it did so also with this fib here. And we saw price indeed eventually, well, it took a while, but eventually moving down indeed. So perhaps we can get some kind of, what I think is most likely at the moment is a triangle like this, but let's see. A stop loss all the way below the bottom, though, is quite substantially still in its around 150. pips. So that means that if we aim for 150, no, if we aim for 118.25, it's about 120. So that's a lower reward to risk than 1-to-1. It's about a 0.8 to 1. So the R2R is not that great for aiming that close by. But of course, the chances that we'll hit the target soon do increase. So it's still possible. It's still something that is acceptable, I think. Funny enough, pound dollar and dollar yen kind of the same. I'm thinking about the same direction, but we know that pound dollar upside is also a bit of a risk there with the counter trend element to it. Another way would be to look at the 4-hour candle, by the way. Another option. Sorry for all these options, but that would be good to see if this turns into a big wick. If it does, you might want to keep out of that. So that maybe is the best, actually, if I think about it. As I said, I'm not a big fan of the long anyhow. It is counter trend and setup, so I think that this makes the most sense. Aussie did bounce at the 50-ish fib, but bounced weekly, so we got this kind of consolidation after a fall, actually, although it rose here. And we got one more fall here. So now we're at a pretty deep fib. Looks like a bouncing spot at the 78.6 fib, and we already did bounce. I don't know. I don't like this particular pair at the moment. I don't see anything of a setup. One could take a long here and trade these engulfing twins, put the stop loss below it though, and aim for any target I think you think is decent, but probably max at 83.18. I'm not trading this one though, personally. It's just sharing my thoughts of how one could look at it, but I don't like the Aussie, as I said throughout the week already. But I did like the bounce though. This bounce I did like, I have to admit. In Monday's recap, I said I didn't like the Aussie, but when it made this pullback, I thought it could be a zigzag indeed. So we were looking at yesterday's at Nenet's analysis, right? And I thought that was a good idea. Right? We just didn't get any follow through. Excuse me, we didn't get any follow through. Dollar CAD, nothing at the moment. Pound yen, nothing at the moment, unfortunately. The reason why I liked the trade though was because of this bear flag, sorry. I was thinking about taking it here, eventually took it a bit lower. Let's take a look at our other template. I was specifically interested in 30-minute chart. Why? Because we're accelerating away on daily 4-hour charts. So there's no trade set up there. We're all, we've moved away from any trend line. We've moved away from any moving average, any pivot point. We've moved away from any fib. So when you are breaking away from all those levels, the only thing remaining in that case is a reversal or a breakout continuation setup on lower time frames to catch perhaps a few more pips into that direction, right? Those are the remaining options. Now, is a reversal interesting at this point? Well, there is perhaps divergence, but it's not confirmed as yet. So no, that's not a factor that's in our favor. So that is something that usually is pretty good to have. Have we reached some significant level? I don't know. Let's take a look. Did we reach the minus 618? Well, we did get pretty close indeed. 176.58. So yes, that could be a bounce. Do we see any price action that is indicating a bounce? Well, we do have engulfing 1-hour candle. We don't have it on a 4-hour chart. Let me get a clean chart like this. So that could be indeed something. Let's examine that a bit more. 30-minute chart, we've reached the L5. So no, downside breakout trades, I don't see any space for shorts anymore. We are too close to the target, to the minus 618 target. I actually exited my trade not so long ago to the downside. So more shorts I don't see. It could move lower, but it wouldn't be for me. I wouldn't be interested. How about the reversal idea? That is something a bit more realistic, I think, although not necessarily therefore probable or profitable. It depends also if you like reversals, first of all. We do see the pound try to break to the upside though, but I guess at this point the question is, do you find the 1 hour engulfing twins enough here within this this downtrend? We don't have divergence, and typically I would like to see divergence on the 4-hour chart. Also, besides a single divergence on the hourly, I think personally it's a bit on the weak side. I think it's too weak. It could move up now, but too little factors, I think, to support it. The only thing we really have on our side is we got good fib targets that were hit, but no divergence though, and only an hourly engulfing, and only single divergence on the hourly. And 4-hour, we don't have a candle close yet. Maybe if the 4-hour candle closes, I don't know. Let's see if there's something else. It's just my 2 cents at the moment. Let's see. Björn is in a short in the Aussie, but versus the yen. Okay, let's take a look at that. We'll first take a look, finish this euro yen. I think that will be, as far as I remember, the same story. Yeah, it's the same story. It's the same exact copy of the analysis done for the pound yen, but then the euro yen. Maybe the slight difference is the euro yen didn't hit L5, but hit L4. So there's some intraday space here. I don't know. Still not too fond of it because of the dollar yen at the 78.6 fib. The euro dollar is pushing up, so I probably would rather wait on that one too. Pound odd, let's take, oh no, wait, odd yen, sorry. Just give me a second because I didn't look at this pair beforehand. Reached the 886 fib there, as you can see on the weekly chart. Let's see how the daily looks like here. The daily all the way down to the 1 minus 618. That was a very big extension. You see that? Big fall, and we got a second bounce after that, so let's move the fib a bit lower from here to here. I don't know if you heard that, that's my cat. She's giving her opinion on on the pair. The 50 fib, so it seems like the minus 272 is the target. 93.63 I would say. It's also, of course, still here, this bottom is in play. So we need to realize that. I think especially this bottom candle here could be a zone of support. Anywhere in that candle, up to the top of that candle, which 93.50. So 93.50 seems to be the target. So let's zoom into the lower time frames and see if there's any short potential there on the Aussie yen down to that left. And we reached just recently 94.20. So a bit, yes. Of course, the question is now about 130 pips left. Where does the risk? If we take a short here, 160, 70 probably at the very minimum. So the reward to risk is not all too great. So if we get a pullback though, obviously that ratio is tremendously altering. So, well, the only thing is, I mean, from an intraday perspective, this is not interesting, by the way, because it's already past the L5. From a swing trade perspective, though, I think if it gets up, indeed, a decent amount, maybe even to the L4, $96 here, absolutely reducing the risk, of course, and making the reward a lot more appealing. Now, will it get there? I have no idea. So if for I'm not sure. Oh, Björn is in the short, so that's great. Yeah, then I don't know what you're aiming for. What are you aiming for, Björn? Do you have a TP? Let's see. Let's wait for Björn to give an answer. In the meantime, euro pound. Oh, you don't have a TP? Okay. I think a TP at 93.50, but then I would aim probably with the TP at 93.60. Seems, in my opinion, a good spot. But yeah, no problem. Let's see. Kiwi. Now that's probably the best picture to show you. It's not that appealing. I think pound out could be interesting for a bit of a risky long, perhaps. We just hit the minus 618 target. So we're making a retracement here. It'd be interesting to see if price could make a bounce. A bounce probably somewhere along these lines here. One of the reasons why is that it would be still a further correction for this pound out to the upside. If we look at the daily chart, of course, we fell a lot. There are zigzags all over the place here, actually. So this is probably going to be another zigzag like this, I would say. So we might get a zigzag here within a bigger zigzag, and there seem to be zigzags everywhere. It's not really a very neat trend. There's no trend at the moment, I would say, looking at this daily chart at least. But as long as price makes good momentum and makes zigzags, it's still interesting as well. We can look for, actually we can still use the fibs very well on zigzags, using them as using the targets as exits and entries sometimes, of course, and the 50s and 61.8s as nice entries. So putting a fib on this entire upside here and looking for roughly the 50 probably at 185.78 is something that I have in mind. All right. Now the reason is because we got back to multiple reasons, but one of them, as you can see, is we're back to kind of the average of the daily. So this could be a bounce, hook back, and go to. Maybe not that high, but something like that. Pound New Zealand, I had the same idea for the Pound New Zealand. Remember, I said looking for the hook back here and upside. So now on the 4-hour chart, could we do the same? Let's see. Probably yes. Probably will be the same story. Euro is, I think, a bit different because look at the Euro. It pushed through the 89, whereas if you look at the pound odd, it kind of bounced off the 89. So I like the pound odd upside a bit more than the euro odd upside. Not too fond of that euro upside necessarily. Although we are seeing some bullish reaction. Gold seems to be stopping at the resistance 1238 zone indeed. It's very messy, nothing very that interesting on this this pair. Pound Swissy. Boy, oh boy. What a choppiness. What a momentum up and down. A big struggle. I guess if anything, shorts would be interesting at the moment now. Although, you never know. You could have the breakout here. I'm not trading it. Let's see. What else can we look at? Euro Swissy. We could take a quick look. Let's see. Where is it? I don't think I have it open. Let me I was just looking at the dollar, Swiss crown, dollar Czech crown. Sorry. Let me open the Euro Swissy. 1 second. I guess the Euro Swiss always looks a bit funny, doesn't it? Let's see. This big spike here. Yeah, that looks very funny indeed. Looks extremely funny indeed. 127, there's no movement at all. There's no candle. Days and days going sideways. Does anyone have a pair, by the way, in the meantime, that they want to look at? In the meantime, just give me 30 seconds. All right, and I'll be back in a second. Just take a quick break. I'll be back in 30 seconds to a minute. All right, I'm back, folks. Thanks for your patience. Yeah, Euro Swissy definitely does look funny. It reminds me a bit of the dollar yen back 5 years ago, when it also was hardly moving 5 pips a day. Does anyone remember that by any chance? That was also very funny. It's almost an exact copy, I would say. Well, let's take a look at the New Zealand otherwise. Let's see. We got downtrend continuation here on the New Zealand, getting very close to that 102.80 support level. That is key on this New Zealand. There's some support level, I guess, prior to 2004, as far as I remember. That is 102.80, I thought, but can't see it here. But anyhow, it fell a lot, but very clear support nearby. So, a bit of a mixed picture here. Downtrend, well, not mixed, but it's a bit of a situation where you have that trend bumping into a big support or resistance. So that's a bit of the story here, the main story, I would say, on this one. But if we get a break, perhaps, of this one, this trend line, I should say, then we could see a bigger upside. I think that's really it from the analysis point of view. Does anyone have any questions regarding strategy? I mean, do you have any questions? Would you like to see a specific strategy being used? Do you have any questions regarding the strategy or any of the analysis? Because I mean, regarding the pairs that I've looked at, I've showed you what I think is most valuable. The odds swissie, by the way, made some upside here, but 40 pips will then crash pretty fast, actually. Pound CAD. Or let's just take a pair and we'll do the fib strategy, right? I didn't see any preference, so I'll choose. But you choose the pair, though. Let's do the fib strategy, but you tell me which pair and time frame. First one is the winner. Once again, the fib, you're a Swissy. That's a good one. That would be a fun fib webinar. Let's take a look at the Euro Swissy here. 1 second, folks. Alrighty. Let's take a look at the 15-minute chart here, and we'll fib this breakout here. And it seems like we're having quadruple to bottom. Minus 618 target at 120.11. All right, no one has any preference, so let's choose, I don't know. Yeah. I put you all to sleep, and I know that sounds a bit stupid, but I mean, I let you go into a sleeping mode indeed. Not good. You're a cat. Great. Blank chart is the best for fibs. Using the mechanical strategy, let's say, let's try to find a time frame that makes sense for a fib strategy like that. We can even start with the weekly, why not? We put a fib on this very first downside here. We can move it accordingly from targets to, for retracement to target, which would be, this is the next swing high, swing low. Hit the almost 38.2 fib, then just hit the minus 618 target, so we can move it again from here to here, and we hit the 886 fib there. So in this regard, there's no fib. In this regard, the target of that fib is actually just above minus 272 target. So this is not so useful at the moment, but let's take a look at the daily. Not even that is that useful. Let's take a look at the 4 hour. 4 hour could be better. Let's put a fib on this very first swing high. It's pretty big, pretty shallow, hit the target recently. So we can move that fib again from here to here. Take a look what we see. We see price hit the 78.6 fib. So this is, from this strategy point of view, it's a shorting territory. EuroCAD is just short at the moment, looking at this. We hit the 78.6. Even now, I mean, at the current price, we would be, it's the same as taking a short at the 61.8. The stop loss preferably would be above the swing high here at the 100 level. The other option would be to wait for price to get to the 886 fib. If it gets there, though, that's something we never know. But then the risk, of course, is smaller in terms of pip size. Now, of course, we could also take a look what the opposite fib is doing, because we do have a swing high, swing low to the opposite side here. So if we put this fib there, we actually see we hit the minus 618 target. So that was a nice confluence on the Euro CAD. I didn't see that one, but that's a nice, using fibs, was a nice short at 141.90, and I think still is probably a good short. Technically, though, the opposite fib is still valid from here to here. So as soon, and you can see that price hit the 786 fib here from the opposite side. So we have a 78.6 bounce here, and a bearish 78 and a bullish 78. See that? We're kind of stuck in the middle now. So we got the fact that this is a good short because there's a target and an 886 fib. I still think the dominant trend is down, so I still think a short here in general is still okay with a stop loss above it. So this is short 1, this is short 2. I wouldn't go for the long because this fib is highly not so probable. And short 3 would be even the break of that key swing high, swing low of the opposite fib. Those are three short ideas. That's not really that last one is not really a fib trade though. It's a breakout trade, of course, but still the idea that the key swing high of the opposite fib is broken could be reason to look for breakouts. Be careful that indeed the 140 and 140.20 could be still support levels because of the bottom and the 886 fib. So that's from a fib point of view. From hourly and a 4-hour, hourly, let's take a look. Hourly, we don't see that downtrend as much, of course, now. And what we see is more of this upside, the importance of this upside. But we know that that is probably more correction. But if we look at the upside, it might be worth waiting for the 886 fib. If we put fibs on this upside, let's take a look. We hit the 50. Not that this was necessarily tradable, but this is our starting point. It's almost the same fib. The 4-hour chart, we put it up to here. The hourly, we would put up to here. The difference is small. Both hit the 78.6 fib. Both have a minus 272 target that is very close to the 886 fib. So there's really not much other information than that. Let's now take a look at the bands. Kalian is recommending that, so let's take a look. Hourly, we see indeed the uptrend already. Looking at the bands, and we see we reach A4 and bouncing up H3. So we could get that upside to H5. So it could be good maybe to wait for this H5 as a short, perhaps. But I don't know. All three are really possible, to be honest. Let's see. Hourly, 30, 15, 4-hour chart. It's pretty flat. Daily is down, but pretty choppy. We did have recently a momentum here. Let's just put a fib from up to down, just plainly like that. We hit the 38.2 fib. Overall, this is quite funky price action, isn't it? I don't know. Looks like an expanding wedge. See that? Like that. Daily moving averages are also quite flat. From this point of view, if you look at the moving averages, the best would be on the 4-hour chart to wait for a candle close below the 21 band, which is similar to the idea of waiting for a breakout below the fib swing high, swing low, below the 140 in fact. Or the alternative could be to wait for a break and then place a fib from here to here and wait for a pullback to the 38.2 fib or something like that for a short. After it breaks through green though. So once again, break through the band, break through green, wait for the pullback, take short, hopefully price goes down, something like that. That would be the idea with using bands. Is that something that you had in mind, Killian, or were you looking more for a reversal strategy? At this moment, I don't see much of a reversal strategy using bands because the bands are flat or slightly down. Kind of a channel line here to the upside. Ah, got it. Killian is writing that, excuse me, that he would like to see how I see it when there's a lot of zigzag. Yeah, that's a very good point, actually. And that doesn't make it too appealing, indeed. This formation is not very, very yummy. Got it. The 4-hour looks a bit better, though, to me. Looking at the fibs, it looks interesting. Looking at the moving averages, we see that the spaces are a bit tight and that the averages are not that angled that greatly. But we do see that the zigzag formation here, for instance, from the 4-hour perspective here, when putting a zigzag on this, fib on this, that this one reacted nicely here. 38 up to the minus 618. It was still a pretty good short here, wasn't it? The 4-hour wick here doesn't look like a bad signal. All right, well, that I guess wraps up the view from my point. Tonight, Nanette is going to take a look. If you have questions, still let me know. But in the meantime, Nanette is going to take a look at guppy moving averages tonight, 5 p.m. GMT time. Tomorrow, we're going to take a look at Pro Learning Lab, which is we're going to take a look at the differences here between trading and investing. We're going to take a look at the difference between, let's say, traders and gamblers, trading and gambling. And also explain why some people don't see any difference at all and what you can do about it. So hope to see you then. That's also at 5 p.m. GMT time. In the meantime, I wish you a good day, good trading, many green pips, as Nanette would say, and see you all very soon. Cheers.